All right, so welcome to another video. Today, what we're going to do is we're going to talk about one of the big mistakes that I see when it comes to drawing support and resistance lines. I see it all the time when I deal with the one-on-one coaching sessions that I work on with people. If you want to grab a one-on-one coaching session, by the way, just visit the Traders Fly website. There's a coaching section and we can work together on video. But if you want to just hang out and go on the chat room, I've got one on the Discord channel where I post some charts there as well, and some support and resistance lines. So the way that I see most people drawing support and resistance levels, and it's really incorrect, and I'll give you the better approach to doing it is, when we're looking at drawing support and resistance, let's just say we're looking to draw a support line over here where the stock is looking to bounce. And this is Home Depot, by the way. And I've got the lows over here at this price point. And then I've got another low over here and I've got another low over here. So you could say, hey, there's 3 spots where the stock is actually bouncing. So now I'm looking at support. But you might say, okay, well, we're not really matching up exactly, because if I draw this right here, okay, that line over there isn't matching up and that bar is not matching up. So I've got kind of one there, but I don't have the other one or the third one. So number 3 is not there, is it? Number 2 and number 3, they're not really there. And that's the problem that a lot of people draw these, is they look at an exact value. So let's say here it's 378.41. So we're looking for this exact value, but it doesn't really work. And even then, they're looking at a thin range. And instead, what you really have to do is, when you look at these things, is you have to start looking at this as more of a range rather than a single price point. Like, you know, because we get trained in our minds, like, where do we stop out? Where do we stop? What's our key trigger? And we do it based on these support lines, but we make them so thin, and it doesn't really pan out. So what's the better alternative? Well, when we look at something like this, the smarter approach is, let's just say I'm looking at this stock right here at Home Depot. The support line or level is going to be something more like that. It's going to be thicker. It's going to be wider. And the reason for that is it's known as a thing called confluence. We got a big pen there. We got a confluence here. So it's known as confluence in the industry. However, as a simple real world example, I always use with people I work with is, let's say you have dinner at 5 o'clock, or you tell somebody, come on over at 5 o'clock. We're going to have dinner later on and so on. We're going to have dinner probably around 6 o'clock. Okay. So if I tell you to come at 5 o'clock, and I got a couple of guests that I'm telling them to come at 5 o'clock, well, one guy might come at, excuse me, they might come at, let's say, 5:05. Another person might come at 5:15. I've got one guy that might show up at 4:55. So I've got all these people that are showing up at different areas and different times, but not everybody's coming at exactly 5. Some, you know, even if it's 30 seconds off, it's not exactly at 5. We're either over or under. And in the market, that's what happens, is that it's the same exact thing where we're always trying to buy it at the lowest price, sell it at the highest price, and people are determining value in different ways as we're rolling through the waves of the market. So when we look at it here, even though we might say, hey, let me draw this technical line right here, okay, there's certain points that aren't exactly perfectly hit, right? So instead, what we have to do is we have to make it a bit thicker and start looking at it as a range. And sometimes that range is going to be a little bit bigger. And you see that same thing happen also on the resistance levels. So if I look at this resistance right here, I could draw this line and I could make it very thin. But what you'll see is there's a few points right there where the resistance or the price was above the resistance. And why does that happen? Well, because somebody thought it was starting to break out, somebody sold it maybe late or bought it early, and you get this kind of noise over there. So, and you have a tiny bit of it that happened right over there as well. So this happens all the time in the industry. So what you need to do is, when you're looking at things and you're looking at, let's say, larger stocks like Amazon, they have much bigger and wider ranges than stocks like, you know, a $50 stock. A $50 stock, you might need to give it $1 to $2 of range of confluence. On a stock like Amazon, it might be a $25 point or range. So you got to give it much more range when you're looking at support and resistance. Whereas comparing it to maybe, let's say, a Harley Davidson here, which is a cheaper stock, you know, let's just say this was our support and resistance, but we've got different zones right here where we have to actually take that into account. So now this price level or range is really the really the resistance zone. It's the area, the wall that we have put up, and now it makes things much more clear and less messy. So I hope you kind of use this to your advantage and benefit. That as you start seeing these things with larger stocks, you got to open it up even more so, because they're going to have more wiggle. Okay, and just the value whips around much more. And just look at this stock right here with Netflix. We've got maybe an extra $40-$50 here, really in that price zone that stock still could be an outlier on. And if you've got a stock, it's going to, or a stop, if you've got a stop and it blows through that, you have to have those extra $5-$10. So if I've got a $500 stock, depending on volatility, I might need an extra $20 just for the wiggle. If I got a $50 stock, I might need $2 just for the wiggle. Again, it's just a rough idea for you, or just, take it into context. But the point is the larger the stock, the bigger the price, the more range you have to give it. So a lot of people do this wrong. They look at a very specific price point and it's like, hey, that is the price. And you could do that if you're really technical. But in this business, you're looking at either the upper part or the lower part, and you got to look at it more on the range side spectrum. So it's kind of like, hey, what's the range of that movement? And it might be kind of that zone or this zone, and you have like a little bit of a cushion in that area. So you're just kind of coming into that. And if it plays in that area, it's really just the noise that's happening there. And you can take this concept into any stock that you're really trading in. Like even here, take a look at Bank of America that doesn't move around as much. You could say right here, resistance, but you could see we broke through it and then rejected it a little bit later. So there was your resistance. Then you had the confluence come in, played around a little bit, and then sold back down. So anyway, I hope that helps. Use this tip to kind of your advantage to understand that if the stock is moving or whipping around a little bit, it could be just a confluence, and this applies to just about any vehicle that you have in the marketplace. You're just kind of looking around and saying, oh, hey, we've got something right here, it's breaking above. Is it really breaking above? And that's why a lot of people use like something secondary as a confirmation. You have like a second tool, an indicator, or a second day if you're trying to look for it. It could be a second week. So you'll be able to see that much more so as you start looking at these charts in more detail, because one day right there doesn't make a trend. And that's what you see here with CSX, where we broke out and then rejected it. Now we're trying again, and we'll see if that pans out and works out. So same thing here with the support. You can see we've played around a few times here, and finally the support held. So anyway, that's what I want to share with you today. Hope you enjoyed it. Thank you so much for joining me. Feel free to check out the Discord channel or the website for some freebies, and I will see you in the next episode.